What's all this business about Goldbach levels?
I'm going to break down ICT's latest trade and show you how he uses Goldbach, aka Enigma, to execute all of his strategies. In yesterday's video, I gave you an overview of Goldbach Time. So Hoppy released the latest version of his book, version 1.13, and prior to that we had a pretty complete theory of Goldbach Price. Now there's been a lot of discussion of Goldbach Time, and there were elements of Goldbach Time in the book, things like look back and AMD cycles and the time-based fib, but we were really waiting for Hoppy to release the official version of Goldbach Time, because as we know, with with Goldbach, all markets are priced using both time and price together. You need both to have a perfect trade, a perfect algorithmic trade. So yesterday I provided a quick overview of Goldbach Time based off of Hoppy's trade that he took in the morning, which was a phenomenal trade. Go see that trade if you haven't seen it. His drawdown was like 6 pipettes. It was a ridiculous RR if you calculate it. Now, some people like solving Rubik's Cubes and others like solving Sudoku. I think my new hobby is showing you how ICT really trades and solving his trades for you and providing the solutions to his trading. And that's what I'm going to do today. I'm going to break down ICT's latest trade. So on the 13th of December, this morning, New York time, he got into a couple of trades. He was initially short on the market and he changed his mind and then he looked for a long. Now, I don't watch a lot of ICT's trades anymore, but I was kind of interested to understand why did he flip his bias from short to long? What made him switch? So I thought I'd have a quick look at the charts. So let me run through this trade for you. Now, as always, it's a real trade, so you can go there and you can have a look. 6 hours ago. 6 hours ago. So I just had a look a few minutes ago. Let's have a look. So he was initially short. So a tight stop. He was short here. He saw an inverse fair value gap. It was violated. There you go. So it was violated, and then he realized he was offside. Now this is the Rubik's Cube I wanted to quickly solve, right? How did he know he was offside? So why did he cancel his trade? I don't know if he canceled it or stop lossed it. I couldn't see. But why did he realize he was offside based off of Goldbach Time and Price? This is what I wanted to do. So now he is long. There's his stop, there's his entry, and then there are his profit targets. So I think he takes off some here, takes off some here. So let's have a look where he actually TP'd. So he initially had a few TPs. These levels are also interesting. He moved that a little bit. He buys in, pyramids in. It creates liquidity at a key level. I'll show you what that key level is and why the algorithm created liquidity there and why he put his TP slightly above it. TP1 was hit. TP2 was hit. Partials never fail to pay out. Okay. And then what happened? I think price just dumped on him and he didn't hit any more TPs. Yeah, I think that was the story. Okay, then he took another partial lower down. And does he stop at break even? My eyes are tired today. He bought here, his stop is here, I think. Yeah, so his stop is at break even now. His stop is in profit. And that's how the game ended. I think he went short. But I'll explain the middle trade. I haven't seen this short trade yet. Okay, so let's go back to where we were for the long. Right, this is the price action. Okay, so December 13th, this low was at 8:30 around that time. Okay, this is around 8:30. This is the contract, so if you're going to reproduce this with me, use the March contract, March 2024, not the December one. That's what threw me off initially because I don't trade indices. So March 2024. And let's bring up TradingView. Okay, so again, this is where we are, 13th of December. There's your 8:30. I haven't checked if there was news there. There's your 8:30. Now, a few things. What I'm going to show you with Goldbach Time, you're going to think I'm crazy, and I'm going to think I'm form-fitting. Go have a look at the screenshots of Hoppy's trade, which I shared in my last video. From those screenshots, you'll see that I'm not making stuff up today. And obviously, the first time you saw me explain Goldbach, you probably thought I was crazy and I was making stuff up. But then after explaining 6 of ICT trades in a row, back to back to back, using Goldbach, and then explaining my own trades and explaining my CPI trade and all the explanations of Goldbach I've shown you, I think it is worthwhile to now stick with me for Goldbach Time to see if it played out the same way as I said Goldbach Price would, right? Okay, so first principles. We have the indicator. When you get it out of the box, it will look like this. So we need to modify it. We're not going to use AMD boxes. So we can remove that. And let's do a little bit of teaching, I guess. When price is consolidating, what is the market doing? Right, when price is consolidating, and you can even, I hate to say it, but you can even use a little bit of Wyckoff's price narrative for it if you want, if you're a Wyckoff type person. But when price is consolidating, the algorithm is essentially creating stops above and below. So people don't know whether we're going to be long or short. So they may be getting all kinds of entry signals, and they are saying, "Oh, we're going to go up, so I'm going to place my stops here. I'm going to go. We're going to down. I'm going to place my stops below." So this is what the market is doing. It's consolidating while it's collecting orders. Now, according to PD array theory, where are orders created? Orders are created in the order block, right? That makes sense. Now, as we know, ICT, when he's executing on the 1 minute time frame for NQ, he typically likes the 27 power of 3. So let's switch to the 27. There we go. Now, the first thing that should be interesting to you is, yes, price did consolidate in the order block Goldbach partition. Price was consolidating in the order block Goldbach partition. And let's see how sensitive price was to the Goldbach levels. Now, as a refresher, because a lot of people have joined my channel recently, so I always have to give a quick explainer of Goldbach. Now, the theory of Goldbach is very simple. Given the current price, mathematics is already determined where the dealing range low and high will be for a specific power of 3. So today we're using the 27 based off the 1 minute time frame. So the price is here. So the low will always be here. The high will always be here of the dealing range. And you don't have to use an indicator. If you have the book, you've got the calculations, you can do it in Excel. Not only do you know where the low and the high of the dealing range is, you also know where all the PD arrays will form. The rejection block will form here, order block, fair value gap, so forth, EQ, and then you have the bearish order block here, and then the high of the dealing range. Now, what was price doing when it was accumulating? Can you see how sensitive it was to first the low? We were sensitive here. Right, during the accumulation we were sensitive. Now, these are interesting. Sensitive here on the wick. Sensitive again on the wick. Now the body respected it. The body of the candle would not close below the low, and then the final candle rejected. Now this is the price of the low. 166.05. Right? See how sensitive it was? Then wick, body wouldn't close, then we took off. Now ICT was concentrating on this short here, so he was trying to short there, but I'm going to focus on the other trade he took. I haven't looked at the short, to be honest. Now, so he probably didn't get an optimal trade entry. He entered, let's see where he entered. So he entered around here somewhere. I think he entered here somewhere. Let's just work it out from his video. Okay, so his entry was the blue line, and his stop was the orange value. One 6 2 3 2 5 1 6 6 1 9 7 5. Okay, I believe that's correct. Now, what do you think made him change his mind as to his bias? And I'll have a look at the TP levels later. Because he was initially short here, and what essentially happened was it disrespected an inverse fair value gap, and then he decided to flip his bias. The way I would have handled this trade was, yes, accumulation, and see how even these candles, see how sensitive they are to the top of the order block level. 16608. Right. Now you're going to have to take a leap of faith with me, because it's probably the first or second time you've seen this calculation. The first calculation you saw on Hoppy's markup in yesterday's trade. But these are the clues to Goldbach Time and Price. These are the clues, and this tells you whether time and price is coming together, and it will give you your daily bias, your intraday bias, the highs and lows of swing points. But the first time you see it, you're going to think I'm crazy. After I show you 10 or 11 trades, it will slowly start to make sense. Or once you buy the book, and the link is in the description, and you read about it, and then you jump on the Discord and see everyone trading it, very soon, once they get it, then things will make a lot of sense. Okay, so have a look at this swing low here. Okay, this swing low was at 834. Now, this is the bit that you're going to think I'm crazy about. 8 plus 34 equals 42. 42. Why is 42 a significant number? Because it's a Goldbach number. It's just off by 1 minute. Now, I found that pricing Goldbach time is usually off by 1 minute. I have my own theories as to why. I don't know for sure, but I'm assuming the price feed from the actual liquidity provider, i.e. the company that runs the algorithm, takes about a minute to get and proliferate to the CME group and to get to us. So I'm assuming when their feed comes out, this number was actually 41. By the time it hits us, it's off by a minute. And I see this a lot where it seems to be off by a minute. And I can't explain it, but it's not random. I always see it off by a minute. Sometimes I get it on the dot. But why is this number significant? Because it's Goldbach number. Right, it's the bottom of the mitigation block. Now, this is the first time I'm doing it, so you're going to think I'm making stuff up. Once I start showing you my trades on EU and GU using Goldbach time, if I start showing you my trades, then it'll be very obvious. Right, 41 is the mitigation block. Right, so this swing low happened at Goldbach time. Not only do we care about time, though, we care about price. Why is this price significant? Well, this is the fair value gap. Okay, this is an order block. This is the fair value gap GB level. What price did it stop at? Within the DMN ICT AMD Goldbach indicator, we can put in the mean threshold and the consequent encroachment. You see, the consequent encroachment is 166.0875. We hit consequent encroachment of the fair value gap, i.e. Goldbach price at Goldbach time. Time and price coming together for Enigma. Goldbach price, Goldbach time. We were off by a minute. We're typically off by a minute. Now, yes, first time you've seen me do this, you're going to think it's nonsense. But you've seen me with Goldbach price a lot now. So hopefully you'll start understanding what Goldbach price is, take a leap of faith, and then stay with me for the next 10 or so explainers of Goldbach time. And then you'll slowly start to get this. Time and price came together, but ICT was thinking about short. He wasn't watching this, right? Once this inverse fair value gap was violated, he then probably had a look, checked, and he saw that time and price had come together. And then he switched his bias. Now, to complete the trade, so he put it on here, so it was just like a market order. It wasn't an efficient order. We would have put it on as soon as time and price came together. So here. Or you could have entered it on this imbalance. I don't call it fair value gap. Fair value gaps only happen in the fair value gap GB level. In this imbalance, we could have put it on if we wanted it. Now, where did he TP? Why was he setting those TP levels? He showed some kind of measured move, quarterly standard deviation projection. So let's have a look. Okay, why don't I do a teaching? See this little fib that came out for me? So ICT teaches you the OTE fib. Right? Do I still have an OTE fib? I must still have one from my old ICT trading days. Okay, this is an OTE fib. The old OTE fib. It's called, there we go. All right, you're probably familiar with this thing. Now that you probably understand Goldbach, if you want to use a dynamic Goldbach dealing range, what you can do instead is create a IPDA fib. Using the same percentages in the indicator. I got some homework for you guys. I also have extension. Some homework. Have a look at algorithms 1 and 2. You should know those by now, based off of my previous videos. Think about what an OTE is, and then think about algorithm 2, where it goes rejection block to the breaker, to the fair value gap, and it takes off. Map your OTE as if it was rejection block, breaker, fair value gap. So it will be here, rejection block, breaker, fair value gap, and then map it with the PDRA matrix. You will find that they are very similar. Side teaching. Okay, measured move we are looking for. So ICT then did a measured move to work out where to TP. So we did this. I must have a measured move. Yeah. So he took some off here, and he eventually took some off here. Let's have a look at his levels. Okay, so he took off some at 16631, which is the just below the high, because it created liquidity below the high. Why does it create liquidity below the high? because that's the logical place to TP because it's the top of the dealing range. So that's where ICT had his first TP, below the high. You could put it at the high, but if it wicks you, you might not TP. Where was his second TP? It was 16634.25. Where did he put it? Just below the extension. Why? Because we could have a rejection from the extension and back into the dealing range. That's why he TP'd where he did. Let's just play these candles through. Bang, extension. See how price is respecting the high now. Right, see how it's respecting the high and it's falling back into the dealing range. And then he shorted from, look at this. You telling me this is random? Right, and then he shorted from the high of the dealing range back down. So you can go analyze that trade yourself, his short. But the key thing I wanted to show you was an element of Goldbach time. Time and price met. The 41 was Goldbach time. Goldbach price was the consequent encroachment of the fair value gap right into the order block. See, there's your order block. Order block in the order block GB level. I hope this has intrigued you to learn more about Goldbach time. If you would like to learn more, then a link to the book is in the description. If you have any questions or comments or trolling that you'd like to do, feel free to leave a troll message below and tell me that Goldbach time is nonsense and that I'm form-fitting and making stuff up.